All right, here we go. Everybody be nice. Ready?
All right.
And nobody
Let's
ever
do
has
it.
an ulterior motive, ever.
Never.
No, no, it's just because they're nice.
Oh my gosh.
Just ask.
Running in on the 80s. I feel like Max Headroom.
I know. Hadn't done Thor's hammer in a while.
Let's go.
I thought I'd try it again. It's been a minute, right?
I'm
doesn't
reminded
have to-
why it's been a while now.
Whatever, Mr. Carl White. Whatever, my friend. Good morning, everybody. Welcome to Loan Officer Breakfast Club. I hope you're all ready to get started. It's going to be a great day. Hey, we got a super cool guest.
All right, who we got?
Today. Yeah, we
Talk
got
about
Michael Prieto. And
Yeah.
listen, guys, he's going to lay this thing out. You're going to like, God dang, that's pretty cool. That's
Gosh
what's going to
dang.
happen.
Gosh
Yeah.
dang.
Gosh.
Gosh dang.
Did I say God again?
You did. Frank, I love you enough to call you out on it.
Thank you, sister. I appreciate it, man. Gosh darn it.
There
How's
you
that?
go. I love it.
Gosh darn it. All right. We also have Chelsea real quick here. She's going to give us a little announcement. But before we get going, just let's wake up the chat a little bit here and say good morning, everybody. Hope everybody's doing well. How was the weekend for everyone? Did you have fun? Did you play? Did you get some work done? Get any deals in the door? Who got a deal in the door over the weekend? Who got a contract in? Be curious to see that. That's when they fly in. Oh, there you go. Teresa, hand raised. Tell us about it. Teresa, what happened?
Yeah.
What happened this weekend?
Good morning, everyone. I got two things over the weekend. I got a new agent, my first agent signed up for MoveTube.
Nice.
And
Excellent.
I woke up this morning to a new purchase contract, 376. So it's a good Monday morning.
Gosh
And
darn
I'm
it.
here.
People like you. There you go. Excellent. Great. That must feel good.
Yeah, it does. It does.
Kind of nice to wake up to stuff like that on a Monday, Who else? Thank you, Teresa. Who else? Who had something great happen over the weekend? Come on, man. What do we got? Let's see. And you can talk football smack if you want. I don't care. It's all good.
Hey, I do love that Kelly said contract Monday in the house. I like
Where?
that.
I didn't see it. Where are you at,
It's just
Kelly?
in the
Talk
chat.
about it. Oh, come on, Kelly.
Hey everybody, good morning.
What's happening?
So it was a client that I was working with, had them in credit restoration since March, and they finally got their scores up and they made an offer with the builder, negotiated $10,000 in cost, and the contract, we talked about it Saturday, talked through it, and the contract came over on Monday, and then also snagged a property in Massachusetts where the client wants to purchase in DC and in Massachusetts. So $1 million for the Massachusetts and $600,000 for the DC property. So it's good to be nationally licensed.
Wow. What do you think about that, Carl? I think that's an okay day.
It was a good weekend.
That's a good weekend. Yeah. Congratulations. Good stuff.
Thank you.
Awesome. All right. How do you say it, Kristen?
Antoine.
Okay.
What do you mean? How do you say it?
It's Antoine.
Antoine, reach out there and smack Frank real quick.
I mean, you can try, but remember, I was in the Navy, so I'm basically a
right.
ninja. So, yeah. Antoine, what you got? Get your hand up. What happened over the weekend? If you're talking, we can't hear you. All right. Well, somebody make something up for Antoine.
Well, I got something here.
Yeah.
Jody put something in the chat. He says, I can't talk, but I realized I hit my 2024 volume last month. I'm very
Whoa.
grateful for this group.
Ooh. So,
Yeah,
Jody, I know you can't
so.
talk, but does that mean in 1 month you trumped what you did in all of 2024? Is that what you're trying to
No,
say?
I think he's saying that like as of the month of August,
August.
and those
Okay.
and those
did everything you did in 20.
He
Got
did
it.
in 8 months what last year he did in 12.
Yeah.
Okay.
That's-
Yeah. He
that's what I
said
think.
correct, Carl. Yeah.
So now the 4 months is all like extra
gravy.
Just
Yeah,
or
gravy.
you could take it off.
Hey, you
Hey,
guys
you know
know
what?
what
Yeah,
Whatever.
take it off.
does?
Right.
Whatever. Right. All
Jody
right.
calls stars every day.
Uh-huh.
Angela got a new contract. Nice.
Yeah.
How'd you make that happen, Angela? How'd you get
Hey.
it in?
Yeah, so I went and spoke to an MLS group about a month ago, and I
Hmm.
got 3 new realtors out of the deal. And this realtor has sent me 5 or 6 different just pre-quals, and we've gone under contract with 2 of them. And yeah, so just getting out there, making the
Good
calls
people.
again.
What'd
thanks
you
to this
talk
group.
about when you went there? What was your topic?
You know what? I talked about MoveTube and just kind couple of things that I offer in this local area and how I stand out with above other lenders in the area and closing on times and just all the things. So
Good for you.
it was
just
great.
taking action, just doing
Yeah.
it.
Yep.
Great
While
stuff.
other people are thinking about it, let me ponder. You're out there hammering away, so good for you.
In the meantime, get out of my way.
Where are you at, Angela? Where are you located?
I'm in Southwest Kansas. And so, but I work Kansas, Texas, Oklahoma. This one happened to be a Kansas contract that came in. So, yep. Yeah.
Well, hey, obviously the speaking gigs are great, right, Angela? I mean, they work, and we are going to have Brandon Barnum back. I think it's the week after next, Carl. Remember Brandon? And then we were talking about, I think it was Kelly talked about someone had to go through credit repair to get some stuff fixed up before this person go into contract. We're going to have Jeannie Kelly on tomorrow with credit repair. So we've got some, and specifically, I want to know about this new Vantage 4.0, like what's going on there when it comes to credit repair and that kind of a thing, right? So we got that happening. Joanne Johansson, what do you got? If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. And you're muted. And your sister and my friend, so I will sad trombone you.
No, you won't. No, you won't.
I will do it.
No, you won't.
Look, there's rules, man.
She's the Connecticut Crusher, so
there's rules.
There might be a little tape there.
I'm sorry, I just had to do it. All right, but I can only imagine it was wonderful stuff. Hey, let's get to what we're going to get to. What do you say? Let's get to that first. Wait, what, Carl?
So let's go.
Oh, let's go. Oh, it's you? Oh, all right. Yeah. Steve's saying, yeah, we get with it already. Okay. So first things first, let's get Chelsea Gardner up. You got something going on, Chelsea. What do you got before we get to Michael?
Yeah. Hi, everyone. Good morning. So I am, every time you guys switch it, I'm like, oh my gosh, I'm like front and center. So I am a Facebook ad social media specialist. If you guys don't know who I am, I own Fully Aligned Marketing, and I am hosting a webinar on Thursday this week on how to stop losing referrals and staying top of mind by running meta ads, so meta targeted paid ads. And I'm going to share with you how to do that for only $5 a day and who you should be targeting and what you should be saying inside of those ads. So if you want to join me, it is 1 p.m. Eastern time on Thursday, the day after my birthday. And so we will go live at 1 p.m. and I'm going to share all of that with you guys. So if you're interested, they just dropped the link to sign up for the webinar, and I hope to see you guys there.
There you go. Well, we will also get an email out for you too with that link.
And just as an FYI, Chelsea is the one that runs my Facebook ads. And I believe Frank, she runs yours. Is that right?
She's running mine.
I don't use Chelsea. I abuse Chelsea.
Yeah. I know. I'll reach out to her and say, hey, can you pull this off? She goes, well, Frank's in front of you. And I went, where did that happen? What the hell? I'm the one that introduced you to Frank. So anyway, I'm just teasing about that. Chelsea's been running my Facebook ads for several years, and it's been an absolutely fantastic business relationship, and I highly recommend anything she's doing. You want to be a part of. She's kind of the like Oz. She's the lady behind the curtain. So while we're up here and doing the I am the great Oz, it's like she's pulling the levers back there. So just FYI,
exactly.
Yeah, she's somebody that you need to know. That's for sure. So good to see you, Chelsea.
Yeah, good to see you guys.
It's nice being able to hand something like that off to someone competent to get it done.
Absolutely. Well, it's ever changing. That's the problem.
Yeah.
You know, it's like I got this, and then I went 1 week and went, well, crap, where's the button?
Yeah.
Hey, Chelsea, where's the button? Oh, it all changed. Oh,
yeah.
So I think she's got an in with Zuckerberg, and she, hey, Zuckerberg, change it.
Yeah.
You know, and,
exactly.
So it's changing, always better, but yeah, it's ever changing. There's no way somebody can keep up with it. It's a full-time job.
Mm-hmm.
Yeah. So
cool.
Good
So
stuff.
make sure
Good to see you,
the link is in the chat. It's there again. We'll get an email out as well today. That is Thursday, Chelsea, at 1 p.m. Eastern. Is that what you
Thursday,
said?
1 p.m. Eastern. You got it.
Don't miss that one. Don't miss that one. That's going to be a good one. All right, let's get to our guest. We have with us today Michael Prieto. And guys, this is going to be really, really interesting. When he reached out to me, first of all, I thought he was spam the first time he reached out to me. So, but he was wise enough to call me and say that wasn't spam. Just so you know, I'm a real person. I went, oh, good, yeah, it's good to know. Yeah. So what is this thing? He told me about it. I went, bro, you got to get on this. People are going to want to hear about this. How about this, guys? Spoiler alert, an extra 13 grand to your FHA borrowers. So how's that? So let's go. Take it away, Michael.
Awesome. Thanks, Frank, for having me today. I appreciate everyone's, being here this morning. And shout out to Chelsea. I've actually known Chelsea for some time, and she's also done all the marketing pieces for this program for us. So love what Chelsea does. She's awesome. As Frank mentioned, my name is Michael Prieto. I have the privilege of serving as the president of Attainable Housing Advocates. Attainable Housing Advocates, we administer a social innovation research project called HOPER. You may have seen this name float around. We're working with over 100 lenders now. I saw one guy on camera here a little bit ago. He had the guaranteed rate background. We just launched nationally with guaranteed rate last week, actually. So that's another national lender that we're working with on this program. So what HOPER is it's a social innovation research project, which means it's not a grant, it's not a gift of money. There's really low barrier to entry. Frank gave you a little bit of a spoiler alert. If you're taking notes, a little bit more of a spoiler alert is there's no credit requirements. There's no DTI caps. There's no income restrictions for this money. There's no first-time home buyer requirement for this money. Really, the only barrier to entry is they've got to be an FHA buyer. Attainable Housing Advocates, we're the group that administers the program. So we're doing all the research data collection as part of the research project. The research project is collecting data points on various things like pre-closing education that we enroll the buyers in. We also get them enrolled in post-closing financial mentorship, which is really, really neat to see how homeowners are reacting to the mentorship that they get after they close on their mortgage. And so our mission is simple. We want to come alongside loan officers. We want to make homeownership not only attainable, but we want to make it sustainable for the long term, right? Because there's a lot of assistance programs out there that, they'll give you a lump sum of cash. Maybe they'll put like a second lien on your home or a silent second. And then they kind of just wipe their hands of you and like, go ahead, you're a homeowner now, good luck. Whereas we're going to give them some pre-closing education, a little bit of cash, and then also some financial mentorship. And what's really neat about this program is we're going to give them a mechanism to drive savings into their bank account so that they can have some emergency savings, because not a lot of people have that. Now, this program, I'm just giving you guys a whole bunch of nuggets because I know I'm short on time. This deck and my contact information is in the Zoom chat. So if you scroll all the way to the top, you'll see the deck, you'll see my contact info. Happy to connect with you after the call. But this program is designed for not only FHA purchase, but all rate and term refinance transactions. Your FHA clients are now going to have up to $13,000 that you guys can use for whatever you need to facilitate that transaction. This is not a down payment assistance program. So there's no higher rate because you're using this program. There's no refinance restrictions down the road. A lot of assistance programs, like you get them into it, and then they're kind of stuck for 3, 5, 10 years. They can't really refinance unless they pay that lien back, right? Not with this program. You get them into HOPER today, next year rates go down and they want to refi, or in 2 years they want to sell their house, no problem. They're not going to ever have to pay this money back that they got. It is pretty much nationwide. There's just a handful of states that we don't offer the program in. But like I mentioned earlier, it's not a grant, it's not a gift, it's actually earned income. They earn the income as they complete their pre-closing education. And then this money is paid to them as 1099 income. So really no difference than like a part-time job. If they said, hey, Frank, I'm going to go work a part-time job for 2 weeks, they're going to pay me $13,000. What Frank is going to say is, well, I can't add that job like on my employment section of my IRLA, but I can absolutely source that large deposit that hits their bank account with pay stubs, right? And that's exactly what they get through the program. They'll get paid by HOPER for doing their pre-closing education. Everything is done in-house at the lenders that we're working with. We're not a lender. We're not underwriters. We don't underwrite the files. We don't create a long delay for closings. Again, we're working with over 100 lenders, mortgage brokers, and retail lenders alike. Now, the problem that we're trying to address with this program is the fact that so many homeowners, they live check to check, and really nobody's talking about that. Everybody's talking about, let's give buyers, a bunch of money up front, but then that what we don't realize is that person that we just gave a bunch of money to was living check to check prior and is probably going to live check to check post closing. And that's when they put themselves at the highest risk for default. And so what we're seeing as we launched with all these national lenders, all the chief compliance officers, all the chief credit officers, underwriting teams, they were like, guys, you hit the nail on the head. Like, if we were to graph this out at the lenders that we're working with, all those lenders were like, yeah, we'd probably see the similar data set. What this tells us, this is called the mortgage default bell curve. It's the propensity that a buyer defaults during the first few years of ownership. So you can see that the spike in default rates at the beginning of the term of the mortgage, but interestingly enough, all these people that defaulted, when we looked at them, they had less than $1,000 in the bank. So it makes sense. There's an inverse relationship between having a little bit of money in the bank and defaults. And underwriters agreed, chief credit officers agreed. They're like, it's not the job loss in year 2 or the emergency life event in year 3 that makes them default on their mortgage. It's the fact that when those hit, they've got nothing to fall back on, and that's problematic. So we want to try to drive that orange line up, the savings line. We want to drive it up faster. And so this is kind of the 4-prong approach to the solution, if you will. We give them pre-closing education, which is about 4 to 6 hours online. As they complete that, they're compensated 3.5% of the home's purchase price up to $13,000. If it's a refi, there's no purchase price, right? So it's 3.5% of their appraised value is what they're going to get up front. They earn their income as soon as they're done with their pre-closing education. That money is secured in a savings club account. Has anyone on the call ever run into a buyer who spends some of their down payment money before closing? It's problematic, I know. They can't spend this money before closing. It's locked in a savings club account in their name. So you guys are safe with this money that maybe they're going to use for closing costs, or maybe they're going to use it for rate buy down or something. Next thing we're going to do is post-closing financial mentorship. We've paid them, Hoper has paid them $13,000. And in return, we'd like them to give us an additional 9 hours of their time after they move in. And this is a little bit more coursework structured. It's 1 hour per week for 9 weeks. And they're going to learn about budgeting. They're going to learn about not keeping up with the Joneses. Just because your neighbor bought a new truck doesn't mean you got to go buy a new truck, right? They're also going to learn about why it's important to have 3 to 6 months of emergency savings in this course. And then the 4th prong is long-term savings, specifically through solar with this program. Now, usually when we're in like realtor lunch and learns or big events like this, when the word solar comes out, everybody's guard usually goes up, because when they think solar, they think, oh gosh, UCC filings, solar payments, solar lease, like $70,000 in solar systems and high commission structures of sales agents knocking on their door. All that does not exist with this program. We've taken out essentially the door-to-door salesperson in this program. They get research project pricing to start with on their solar system. And you, as the loan officer, get to finance that solar system right into their first lien mortgage, which means all of your originated volume now instantly goes up by all the FHA deals you're doing with this program. I was talking with a loan officer at Cross Country, and he's like, Mike, I'm doing like 6 of these a month now. That means I've added another $150,000 to $200,000 in originated volume just because my normal FHA business, I'm now incorporating Hoper into it. So it's really, really powerful to hear stuff like that. Now, just to recap, what is the buyer going to do? They're going to do 4 to 6 hours of education. That's going to cost them $149 for their course with us. They're going to agree to do 9 hours of post-closing mentorship. That's going to cost them $99. So they've got a little bit of skin in the game, $250 all in. They're also, as part of the research project, going to respond to periodic future surveys, 2 surveys a year for 5 years. And we're going to gather some data points off of that. How much do you have in savings? What did you think about the mentorship course? What did you learn? Things, how much are you saving on your energy now because you have a fully owned outright solar system and you don't have as big of a bill as your neighbor. So how much are you saving there? What are they going to get? They're going to get 3.5% of their purchase price up to $13,000. And get this can be used for any element of close above their minimum required investment. So all these FHA buyers who have their down payment, you can now give them $13,000 to do something else with. And we'll talk about what they can do here in just a second. They're also going to get the same FHA rate that you were going to give them anyways. and they're going to get a brand new, fully owned outright solar system as part of their mortgage without any second liens or solar headaches that come with the traditional solar arena. Now, I mentioned they can use it for anything above their MRI. This is the stuff that we're seeing loan officers use it for. Closing costs. We've got loan officers paying off debt with this extra $13,000 that just hit their account. We've paid off so many vehicles for clients where we've eliminated a $400 or $500 or $600 payment on their auto loan so that they could budget for maybe a bigger house, a better house, a different neighborhood. Lots of ways you can slice this, guys. Down payment replenishment. I just mentioned all those FHA buyers who have down payment. You're probably like I was in lending 18 years. I helped so many buyers, and I remember depleting their savings account, getting them into home ownership. And I was like, this is great. I got them into a home, but now they're broke. They're living check to check. With this program, I can replenish their down payment, essentially give them their down payment back, because that $13,000, they don't lose it if they don't use it for the closing. So if they don't need it for closing costs or debt payoff, they get to keep that money, replenish their down payment. Realtor fees we can pay for. What about, have you guys ever run AUS and it gives you a refer, but then you put reserves and it flips it to an approve? Well, now you've got $13,000 extra that you can use as reserves to strengthen your automated approval. We've got loan officers crushing it with interest rate buy downs. I've got one loan officer, she's out in Arizona. I call her the rate buy down queen because she's competing with all these new builders who have these like low teaser rates and stuff. And so she's like, hey, come with me. I'll introduce you to Hoper program. I'll take that 13 grand and just buy your rate down to probably better than what the builders are offering. And then we don't see this a lot. I heard one young lady earlier say she's licensed in Texas. Texas is the spot where we see sometimes appraisal shortages. I'm talking about like $1,000 short, $5,000 short, things like that. Well, you've got an extra $13,000 that you can bridge that appraisal shortage gap with. So really, really versatile bucket of money that you can use. Now, let's talk really quick about solar. Like, how is it incorporated into the loan and why? Well, the why is because it's probably the second or third largest expense in a household. That's the utility bills that only continue to rise. I mean, raise your hand if you've gotten a letter from your electricity company that said, hey, great news, next month, we're going to be reducing your electricity rates. I don't think I'll see any hands popping up. But how does the solar get incorporated into this FHA loan? Well, again, I did loans for 18 years, and I don't think I ever used the word cool and FHA in the same sentence. But this solar and wind technology policy that FHA has is really cool. It allows you to finance that solar system right on top of their base loan amount. It allows you to go up to 120% loan to value, which we rarely see that big of a number, because you're talking about like a $500,000 house, 20% of that's 100 grand. These solar systems are never going to be that much. They're research project pricing, so you're going to get a much lower price there, much lower LTV. There's no change to the appraisal or down payment requirement. The solar is treated almost like your upfront MIP. Your upfront MIP gets stacked on top of your base loan amount. Your appraisal doesn't have to come in higher because you're stacking on your upfront MIP. Well, FHA says your appraisal doesn't have to come in higher just because you're stacking solar on this transaction. And then they own the system free and clear, like I said. So day one, they immediately start seeing reduced energy bills. They don't have a solar payment. They don't have a headache of solar liens. When they go to sell, they don't have any problems. Obviously, they get long-term savings, immediate savings. The solar, when they go to refi or sell, since it's owned free and clear, they're going to get some value for it. Not dollar for dollar value, kind of like a swimming pool, right? Like if they put a pool in, $50,000 pool in year one, in year two, they're not going to refi and get $50,000 in dollar for dollar value on that pool. Similar concept with an owned free and clear system. It says net zero impact to monthly expenses. So this is what it could look like for a client. In case you're wondering, well, wait, you're financing the cost of the solar. Doesn't their mortgage payment go up? Yes, but you're going to get $13,000, and look at what your monthly expenses really look like. Without Hoper, let's say the mortgage is $2 grand. Let's say their electricity bill in that market is $300. So every month their wallet has to fork out $2,300. With Hoper, their mortgage goes up, let's say $2,200, but now look at their utility. It goes down to $100. They still have a utility bill, but it's way less. Look at their monthly out of pocket, still $2,300. So their wallet's not going to feel any difference when they enroll in the Hoper program, unless of course the loan officer gets creative and uses the $13,000 to buy their rate down or something. I mentioned a second ago the loan officer I was talking to about how he's doing 6 of these a month. Without Hoper, let's say you do 5 loans and you originate $1 million. Let's say a comp structure was 1% of that. You're getting 10 grand. Now with Hoper, you do those same five loans with with Hoper, you're originating 1.2 million and you're getting paid more. So it's a win-win, not only for your clients, but for yourself as well. Here's how you get started. I mentioned my contact information in the Zoom chat there. So just reach out. As long as you've got an FHA approved client, pre-approved client, we can get them enrolled. What we'll do is we'll provide you with this eligibility letter. This letter is going to tell you all the details you need, like how much the solar is going to cost for that client's home, the one they're purchasing or refinancing. It's also going to tell you how much they're going to earn from the program. Once you have this letter, we don't give this letter to the client yet. We give it to you as the loan officer. You help facilitate the communication. So what happens is you send this letter to the client and you say, hey, I've copied, Nick or Jorge or Ryan from Attainable Housing Advocates. They're the experts on the program. I'll let them connect with you. That gives us the green light to call your client, walk them through the program, and 9 times out of 10, they're going to enroll. They're like, I didn't even know this existed. Super, super glad. Here's a few reasons why loan officers love it, but really 2 things that I want to talk about. Increased loan applications. All those clients that maybe need they got high DTI, they've got a little bit of a challenge. You've sent them a way to go figure out a way to get some money. Now you could maybe increase your loan applications by calling those people back. And then referral machine. As we get loan officers that become Hoper advocates on the program, you get two or three of these under your belt. And we get consumer direct leads where they're like, I need a loan officer and a real estate agent. Like, can you help me? Yeah, absolutely. We want to give those leads over to a loan officer that's an advocate for the program. So that's how we can give back to our loan officers as well. It is available nationwide. All the orange states, you're good to go in. I saw some chat questions about like what lenders: Fairway, Guild, Loan Depot, Lower, Prime Lending, Rate, all the rate companies, so Citywides and all, Guaranteed Rate Affinity, all over the place. Give me a call if you're a mortgage broker. Also, you've got 2 wholesale lender options that you can send these to. So I've got 4 minutes, Frank. I beat the clock, so I'm going to check the questions if that's okay.
Yeah, and so let's do this too. We're going to drop the Jen, do me a favor, put the slides in the chat one more time. So we'll get the slides put in the chat again. And then Michael, throw your email address in there. And so we've got that, so people can reach out to you directly.
And your personal home phone number. Go ahead.
Yeah. So let's get that going in there. And there's a gazillion questions in there. So I don't know. Kristen, have you been checking that? Can you help us with maybe some of those questions? There's so many.
Bill Devers had a question. How long does the process usually take?
Process usually takes about 8 days for the buyer to get that $13,000. So very, very quick.
And they have to do solar?
They have to do all 3. They have to do the pre-closing education, have solar financed by you, the loan officer, and do the post-closing mentorship.
Who are the wholesale lenders again for the brokers?
EPM, Equity Prime Mortgage, and TLS, the loan store.
Okay, so there's for our brokers. Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com. Let's see. What else we got in here?
Who chooses the solar company?
Great question. The client will choose their solar company in their state based off of the vetted installers on the program. A lot of installers, each state has 2 to 8 installers that have been vetted specifically for pricing, and some other things like BBB reviews, how many installs, their financial statements. So the client will get to pick, but they can't just go pick Uncle Bob solar install. They've got to go through a vetted installer.
Kelly, you got your hand up?
Yes, I just had a question. How does he get chosen to use? Like, do we have to forward his information to our products team?
Yeah, good. Yeah, if you're a lender that's not already doing it, then yeah, you get me in touch with your product development team. We'll have the same conversation that we've had with everybody else and try to get this launched with you guys as well.
Okay,
Wonderful.
thank you.
Yeah.
Adam, go.
I think you may have mentioned it, but so this gets financed in with it. So on a purchase, how does that get written into the purchase contract for the
Great
solar?
question. Yeah. So the FHA solar and wind policy does not require that it gets written into the purchase contract. For all intents and purposes, the purchase transaction, it's just a regular 203B mortgage. The appraiser goes out, appraises it, doesn't know solar's going on post-closing. And you'll have a separate solar contract that goes to underwriting. And then at closing, there's an escrow holdback for the cost of solar. Buyer moves in, everything's happy, everything's normal. And then about 60 days after closing, the solar gets installed, the escrow holdback money gets released to pay for the system. You financed it in the larger mortgage. They pay for it with the escrow holdback because that'll get released to pay for it.
Let's see. It was Amy's. So the 13,000 can be used for anything. It's just basically they're getting 13 grand to use however they want. They could be for down payment, closing costs. They can just keep it in the bank. If they already have enough for down and closing, they can just keep the 13 grand in the bank, right? So they can do whatever they want with it. Let's see. Do you have any average costs as far as solar goes? Like what it runs?
Yeah, good question. So for the most part, except for California, you're probably going to be somewhere around the high 20s to the high 30s, depending on the size of the home, the age of the home. So call it 27 to 37,000. But in Cali, everything's more expensive out there. You're going to be in the 40s in Cali.
Okay, cool. Adam, still got your hand up there.
Can we finance in a monster truck? Do y'all have a monster truck kind of program for me and my friends here in Central Florida?
No,
Chelsea knows
trucks.
about this. Chelsea's in Dade City. She knows what I'm talking about.
Yep. Yeah, no
For
monster
Frank, it
trucks,
actually was
but
another question. Oh, sorry.
I was gonna say no monster trucks.
Oh, sorry,
but you
Adam, go
can do
ahead.
extras like EV chargers, batteries, larger solar systems, smaller solar systems. So just because I threw out those numbers, a buyer could say, you know what, I really want to build a bigger system. I want to add batteries. I got a new EV. I want to put in a charger. All that stuff can be accounted for in this program.
Nice.
Okay,
And they
let's
get
go.
research project pricing on it all.
So the other question was,
Go ahead, Adam.
So that financing of the solar, do we have to put another payment on the 1003 for the debt to income?
No, it's actually built into the first lien mortgage. So your base loan amount is going to increase, making your LTV look a little wonky. It's going to probably be over 100% on these FHA deals, but you're building it into their mortgage payment. So instead of them having a small mortgage payment and a big electricity bill, they're going to have a little bit larger mortgage payment and a smaller electricity bill.
It's Sarah Cox. No, there's no subordinate liens or anything like that. It's being paid for cash. You just have a bigger loan amount, your first mortgage loan amount. Brad, what do you got?
Who's paying the 3.5%? I mean, and where does it come from?
Good question. It comes from Hoper. So Hoper is the social innovation research project that's where the initial seed money has come from. So they get a check from Hoper. The fund, in case you're wondering, like, well, is it going to run out soon? It's able to be stretched and supplemented by some of the solar manufacturers that are interested in the research data that we're collecting.
Here's some good stuff too. So Michael Harris. So, like you get the solar rebates. If you put solar on your house, you get some sort of rebate. They get that, right? Because they put solar on their house.
That's right. As long as it's still active. Like right now, the big beautiful bill is changing that. So like next year they'll lose the tax credit and stuff. But yeah, if they move fast enough, like if you get a buyer now this month to get into this program and they close on their home here in the next 30 days, there's a good shot that not only did they get 13,000 from the program, but they may get another 10, 12, 13 grand from the federal government.
Wow, good stuff. And Russell Smith, yeah, you're right. The first mortgage values or first mortgage amount might be higher than the value of the home when it's all said and done. So yeah, it's part of the planning process for anybody, right? Even with the down payment assistance programs, there's pros and cons to everything, So, but in this case, it might be well worth it to someone. They get in, they get solar, they get 13 grand in the bank, it is what it is, right?
That's right.
Okay, let's get your email in. We got the slides in there one more time. Let's get your email in there one more time, Michael, just so you can put that in there, just so they got your email. There's a bunch of other questions. Hopefully you guys can just reach out to Michael directly for any further questions. His email address is in there. His phone number is in there. Get that, and the slides are in there as well. So is your contact information on the slide deck as well, Michael?
Not on the slide deck, but but you guys have it in the chat. So jot that down.
Okay.
And I really appreciate the time this morning, Frank.
Well, that was pretty cool. What do you think, man? What do you guys think? Pretty cool.
Pretty
today?
cool, yeah. I know there's a lot of change. Like, what was it? Tesla, they're stopping, or I guess all EV cars, that $7,500 incentive is coming to an end. I guess here in just a couple of weeks or something like that. So
Yeah,
what
it's
they don't
pretty
tell you in the fine
September.
print of that, by the way, what they don't tell you in the fine print of that is that if you're a mortgage loan officer following the daily success plan, thus making over $300,000 a year, you already didn't qualify. So there's that. So it's like hey, finally it's a level playing field, you know. So
The little subtext, MMA member, question mark, other details apply. Yeah.
yeah, I know. I was so excited. I went down there and it was like, oh, wait a minute. Crap. Yeah.
All right. Well, hey, man, thank you so much, Michael. That was very, very cool, man. What a great show today. That was really, really cool. And Chelsea, don't forget about her webinar this Thursday, 1 p.m. Eastern time.
And she's going to be joining us at the boot camp coming up here in what, 2 weeks or something like that?
Couple weeks, right?
Yeah, she's going to be on day one Thursday, I think in the afternoon, dropping some love bombs. I was going to say dropping bombs, but it's love bombs.
Love bombs.
So always enjoy what Chelsea's got. So good stuff, Michael. Thanks, buddy.
Yeah, thank you, man. Really, really great. Good stuff. All right, you guys, let's
Before we
get
leave, I just wanted
ahead.
to remind everybody there's still time to register for the Mortgage Town Hall on Wednesday.
Okay, we can go ahead and
We'll
throw
talk about
in the
that
chat.
tomorrow. We'll talk about
Okay,
that
good. We'll talk about it tomorrow.
Thanks for bringing it up.
Sounds good.
Yeah.
All right. Well, cool, man. Cool. So, Kristen, want to say anything about the Eagles or anything?
Did they win
I
again?
mean,
They got smoked.
go Birds.
Wait, did they lose?
Go Commanders.
They won.
They won. Oh, good for you. And
It was a very exciting game. It was down to the wire. So yeah, there's a lot going on.
Tampa's 3-0.
Ooh, all right.
I think that's the first time in like 20 years that we've been literally. I think it was like 2005 or something like that we were 3-0. So
49ers are 3-0.
Hey, I just heard something on the radio. Maybe I heard it wrong, Kristen. That like, is Tampa playing the Eagles next week?
I actually don't even know. I'm going to a wedding next weekend, and so I'm like focused on that. I have no idea who we're playing next weekend.
Okay. I thought I
right,
heard
put
it
it in
on
the
the radio,
chat.
but I wasn't sure.
Bucks play Eagles next
the
week.
Eagles.
Okay, so
Hey,
we
Kristen,
do.
you're
All
my
right.
sister. I love you dearly, but hey, the gloves are going to be coming off. I'm just saying.
Bring it, Carl. Bring
I'm
it.
I'm just putting that out there. So,
Go Bears.
what are they
All
playing?
right.
What if they're playing in Tampa or Philly?
I don't know.
Some Tampa. They say Tampa.
Oh well now.
We're be down there sweating. We're be down there
no.
sweating.
No. Hey, no hard
Awesome.
feelings that went on the boot camp though, okay? Because I know like the next week you'll be here for the boot camp, so no hard feelings either way.
All right, sounds like a deal.
Maybe a
Sounds
little.
like a deal.
Maybe a little. If we lose, maybe a little.
All right, you guys, have a wonderful, wonderful day. We'll see you here tomorrow at the Loan Officer Breakfast Club. Adios.
Have a great day, everybody.